Is core infrastructure dead? It's a really good question and one many are asking themselves right now. Ultimately, I think possibly not, but we do see much better risk-adjusted returns in other parts of the market. And as a result, we think for a smart investor, actually focusing on further down the risk spectrum or further up the risk spectrum provides a much better outcome. Fundamentally, it's not providing attractive returns relative to the increased interest rate environment. So if you look at it, investors are actually saying if you move down into, for instance, high yield infrastructure debt, returns there have come up a long way. So on a relative basis, they're now much more attractive compared to core. And equally at the other end of the spectrum, core plus, value add, even opportunistic, provide much better risk-adjusted returns. But looking at that lower risk end of the spectrum, high yield infrastructure debt has benefited directly from a one-to-one pass-through of the higher interest rate environment. So assets that targeting returns or providing returns in the 6 to 7% range are now 8, 9, 10% in euro terms, 11, 12% sometimes in US dollar returns. On a relative basis, core infrastructure is still high single-digit returns. So you're able to achieve an equal, probably even a higher return in the high yield infrastructure space, but you're not taking that equity risk. You've got a much greater protection from the capital structure. You've got much lower volatility of returns in that high yield infrastructure debt space. We see the real opportunity, the best relative value in that mid-market core plus part of the infrastructure equity market. If you think about the big macro trends that are driving infrastructure investment, so decarbonisation, digitalisation, demographic change, climate change, what do they need? They need the infrastructure of tomorrow to be built. And this infrastructure is sort of fundamentally core plus mid-market. And what do I mean by that? If you think about it, EV charging, if you think about bio-LNG, if you think about district heating, if you think about the rollout of digital networks, this is all happening in the mid-market. It's entrepreneurs, it's small family-run businesses that is building the infrastructure of tomorrow. Risk is really important for an infrastructure investor, and although I'm talking about moving into the core plus space, we're still able to hang on to those things that we think as true infrastructure assets. So high EBITDA margins, fixed assets, inflation protection, assets that are fundamentally not aligned with the economic cycle, so provide that deep downside protection. Core will live on, but I think at the moment we see smart investors making a decision to shift further down the risk spectrum, further up the risk spectrum. That barbell approach is providing a better risk-adjusted return on an overall basis.